Good morning and good evening, ladies and gentlemen. Thank you for joining us. Today is the first session of our 2022 FinTech Fridays. My name is Karyl and I'm pleased to be moderating the event. Before we start, just a quick reminder to keep your microphones on mute, rename yourselves to include your name and institution so that we can identify you. And we also encourage you to ask a lot of questions by using the chat function. With us today, we have an amazing panel of experts on blockchain and crypto. And being just past a couple of days after the International Women's Day, I couldn't be happier that all four of them are women. So let's kickstart this session. So 1.7 billion people in the world are under or unbanked. That's 31% of the adult population that is left behind by the traditional banking system. Of these 1.7 billion, 55% are women. This unbanked population have little means or no means at all to send or receive money, to save money, to access credit, or even get insurance. Women in particular face greater challenges in the form of cultural norms, restricted legal laws, biased algorithms, and an unstable and untrustworthy financial services systems. Blockchain and cryptocurrencies on the blockchain have been described as democratizing the financial systems thanks to this technology, which is global, open source, and accessible to everyone who has internet access. They provide an alternative financing infrastructure, regardless of race, ethnicity, gender, nationality, or socioeconomic class. Their decentralized approach, which immutable, encrypted, and transparent transactions means they can allow for potentially cheaper, more secure, and more efficient financial transactions. Unfortunately, skepticism about the cryptocurrency applications of the technology is widely spread, citing cybercrime or negative climate impact due to cryptocurrency mining. Many countries and organizations also consider cryptocurrencies as illegal, whereas El Salvador became just a few months ago the first country to use Bitcoin as a legal tender, making it the second currency widely accepted across the country, along with the US dollar. In just 1 month, 50% of the population in El Salvador downloaded the Bitcoin wallet. That's in a country where almost 70% of the population is under or unbanked. On the other hand, though, most governments and regulators have fully embraced the blockchain technology, including major economies such as China and India, even putting national strategies on blockchain. Today's objective is to first understand cryptocurrencies and blockchain, and then discuss the ways in which this technology can be used to create greater access to financial services and therefore financial inclusion. So, before diving into the panel discussion, first I would like to give the floor to Monica Singer. Sorry, let me just stop. Okay. I want to give the floor to Monica Singer, who is the South African lead and senior strategy for ConsenSys. And she has graciously accepted to share a small overview of blockchain and cryptocurrencies, basically the 101, so that we're all fully comfortable really addressing the panel discussion later. Thank you. Monica, the floor is yours.
Thank you, and thank you very much for the opportunity to present on a topic that I'm absolutely passionate about, because I can assure you that this is the technology that will bring financial inclusion, especially for women, and I will explain why that's the case. Carolyn, would you change the slides for me, please? Thank you. Okay, so I only have 10 minutes to explain a very difficult concept, but the most important thing that you need to know about blockchain is that it's decentralized. What does it mean? Is that what is very valuable about this technology, and it all comes from the white paper by Satoshi Nakamoto that created Bitcoin. So I really recommend that you all download the paper, you read it, you can skip the math if you're not into the maths, but have a look at the philosophical principles that were explained in this paper that changes the paradigm of everything we've been doing until now. So in this paper, Satoshi says that the way that the recording of the transactions is going to happen, it has to be in a way that is inclusive. how are we going to achieve inclusion? We're going to use the internet. And the internet in the past couldn't be used because you couldn't address what is called the double spend problem. So now the blockchain resolves that and not only creates a global network, so anybody in the world, wherever you are, as long as you've got access to the internet, you'll be able to participate. Also, it's open source, so anybody can participate. It's the internet. Then it's also very robust because one thing that you'll hear in the language of blockchain is that you have one single version of the truth, but many copies. So when you have many copies of a ledger that everybody can see at the same time, then it's very difficult to hack because the hackers need what is called the honeypot, which is one database that they can hack. Now imagine that that information, it's replicated in many, many, many places at the same time. So to hack it, you need to hack at least 51% of all the copies. Very, very hard. In the Bitcoin protocol, it's impossible. The Bitcoin blockchain is impossible to hack because it's so complicated. It's so decentralized. Then you have the concept of uncensorable. As you know, for example, China and many other countries are forbidding the use of Bitcoin, and it's still being used. And therefore, we know that there's no ways that governments can control this or prevent it. The only way they can do it is by, unplugging the internet. But as we know very well in technology, there's many other ways to get into the internet without having to be censored by the government. And then finally, and the most important thing for me is that it's totally egalitarian. I don't have time to tell you about the decentralized finance protocols, but if you want to take a loan, for example, in any of the DeFi protocols, they don't ask you who you are. Like when I took a loan, they just asked me my name, they asked me my address because they need to know where I live, and that's it. And then they ask me, have you got collateral? So you put your crypto as collateral, and then they give you a loan. And that is so magical because in the past, when you needed a loan, you had to go to a manager in a bank and you had to justify your income and you had to explain who your husband was and all of these questions that are totally irrelevant in the new creation of financial markets. So that means that by being egalitarian, this technology is inclusive. And therefore, the whole idea is that the most decentralized it is, the least it can be controlled by totalitarian governments or by authorities that can decide to pull the plug on your bank accounts. We saw during the financial crisis, I don't know if you remember, but for example, people that were holding bank accounts in Greece, when there was the crisis in Greece, the accounts got frozen. And then if you had 100, I don't remember the currency at that time, I think it was still the euro. Yes, 100 euros in the bank account, you were only allowed to take, I think, less than 50% of that out of your account. So why allow the government to have so much control in your money? And recently we got the example of Canada, where Canada decided to go and freeze the bank account of the truckers that were not happy with what was going on in Canada. And that is really very difficult to do in terms of the blockchain. Yes, you have to understand, long story, that at the end of the day, you need to have the keys, the private keys under your control. If you have the keys under your control, nobody can touch your money.
Monica, you went on mute by mistake.
Yeah.
Sorry, next slide.
Okay.
So the one thing that is very important to note is that this technology is very disruptive. It will disrupt legacy financial markets. It will create so many other new opportunities. Why? Because it eliminates the intermediaries. It eliminates reconciliations. It is real time. The auditors will not come a year later. The audits will be done real time. The taxes will be paid real time. The regulators will be able to see the information real time. So do you understand that that has a massive impact in reducing costs? It also increases revenue potential because there's so many new products and services that are going to come up. I'll give you an example. I confess, I'm a baby boomer. I saw the internet when it was created in the 90s. And I promise you, if someone would have said then that one day, for example, I was going to have an app called WhatsApp and I was going to phone for free anywhere in the world, I would have said, no way, that's impossible. And today we have WhatsApp, which has changed our lives. And I can assure you that this is very beginning of the journey of all the new applications that will explode in the innovation world because of this amazing technology. And as I said to you before, it reduces the single point of failure, reduces risk because of this real-time ability to see the single version of the truth. And then finally, the most incredible thing is so transparent. Transparent. You can see the complete audit trail. You can verify the provenance, where things come from. And I'll give you an example. Do you know that the donations that are taking place currently to the Ukrainians, you can track exactly who gave the donations and what are they using the money for? You can see exactly, are they buying tanks? Are they buying food? That has never been possible in the legacy financial markets. I used to work for the World Bank. Trust me, the World Bank has no clue where the money is going until after the event. And many times the money disappears. And by then it's too late to actually do anything about it. And this technology can prevent corruption in the government. You can check the procurement. It's a massive game changer. And then coming out of the blockchain paper, the Bitcoin paper by Satoshi, the creation of this ledger, it's now so magical that it's immutable. Once you make the journal entry, you cannot delete it. It has the complete audit trail. If you make a mistake, you need to do an equal and opposite. It's decentralized, as I mentioned, and it has a mathematical formula called cryptography that prevents all these people from colluding and cheating when they create the journal entries. So on that basis, this technology completely will change, for example, the accounting profession, and it will also change the legal profession, because in 2015, when Vitalik Buterin invents Ethereum and invents the concept of a smart contract, a smart contract is really functionality that automates and programs the intentions of the parties. So instead of in future having to sign pages and pages and pages of contracts, you're going to be able to put the contract in code. So that's why another big motto in this industry is the code is the law. The code is the law. Next slide. The other thing that everybody gets confused, everybody thinks that blockchain is Bitcoin. Actually, blockchain, as you can see from everything I described, is really a ledger system that gets recorded in the Internet of Value, that is immutable, blah, blah, blah. Bitcoin is just one cryptocurrency, one type of tokens. There are many, many, many types of tokens, which of course, I don't have time today to explain all the tokens. So Bitcoin is just one type. It's the first one that gave the idea through the Satoshi's white paper. Next slide. And then the most incredible thing that is happening in the world that I find incredible, that I'm alive at this time, because in the history of money, money had many evolutions, and around 1971, the dollar was pegged to gold until Nixon decided to unpeg it. And therefore, that's when the truth be told, the dollar is not pegged to anything. And therefore, you have to trust that the Federal Reserve Bank will protect the value of the dollar. We know very well that if they printed, money will go brrr. If they printed in excess, inflation comes. And today in the US, they are experiencing high levels of inflation. Then I don't have time to explain the fractional banking system. But the fractional banking system, in a nutshell, allows commercial bank to create money out of lending. And all of this has created, in a nutshell, if you sum it all up, you will see why we had a financial crisis in 2008. And that's why Satoshi issues the paper end of 2008 to say, we need to do something different. And that's your cryptocurrencies. But then what happened in 2 years ago, Facebook decided that they were going to issue what is called a stablecoin. A stablecoin is money issued by a private company that is pegged to an asset. They were not very clear how they were going to peg it. The truth be told is that there was so much political infighting that eventually they had to give up the project. But what happened was there was an explosion of stablecoins that are coming into the market. And because of that, the central bank realized, wait a second, if Facebook has got 2.3 billion users and they all move to this privately issued money, what's going to happen with the fiat currency, the money that we, the central bank, control? People will stop using it. So immediately they decided to go and create what is called a central bank digital currency to replace cash, which will be very similar to cryptocurrencies. And that is what's happening at the moment. Close to 90% of central banks are working on this project. And the Bank of China has already issued the central bank digital currency that they used during the Winter Olympics. And it's currently being used by millions of people in China. So now it's going to be fascinating to watch how the ECB and the Federal Reserve Bank behaves in terms of the decision to issue or whether to issue a central bank digital currency or not. The reality is that emerging economies will benefit hugely from financial inclusion if the central bank issues this currency. And the main reason that you might never forget, most important thing, central bank digital currencies are a liability on the central bank, not the money you currently have with your commercial bank that's always exposed to risk. And that's why in developed countries, you have deposit insurance. Guess what? Emerging markets, we do not have deposit insurance. If the bank fails, you lose your deposits. This has been a crime that has been committed to so many times and so often. You could write books just about that. So now the world is now saying, what is going on? So if you change to the last slide, which is my slide on stablecoins, as I said, stablecoins are something very unique issued by private companies, and they peg, they collateralize to something. So you've got the category of stablecoins that collateralize against fiat currencies. The most common one is called USDC by the company Circle, collateralized by the dollar. Then you have collateralized by commodities, meaning there's a vault with gold, and then you issue a stable coin, which is a digital representation of the gold that is in the vault. But someone must look after the vault, someone must do the audit that the vault is there, that the gold is there, in the same way that someone must do the audit to ensure that the money that supposedly it's equivalent to the stable coin is in a bank account. And so just remember that all these problems add to the risk of the stable coins. Then you have the crypto collateralized, very famous one is MakerDAI, was one of the first ones, very admired company, I have to say, very admired company. But the way that they peg this stable coin is by asking you 150%. So you have to put 150, let's say, ETH in order to get 100 MakerDAI. And therefore the collateralization is quite exaggerated because it fluctuates in value. So you have to understand that that is a little bit of the downside. And then the one that is fascinating for me, I've been researching this and I really believe you can make a note of what I'm saying now, that in the next 5 years, I truly believe stablecoins collateralized by an algorithm is going to be the one that should prevail. And I wrote a paper just on this one. So the point that I'm trying to tell you is that most banks are trying to create stable coins. Why? Because if the CBDCs come into the market, the risk is for the banks that nobody's going to go to a bank to deposit any more money. So they want to survive by issuing their own stable coins. Many of the clients of ConsenSys, which I work for them and with the biggest blockchain company in the world, many of the credit card companies are issuing their own stable coins, the PayPal's, Visa's, MasterCard, because who's going to use a credit card in the future when you're going to have a stable coin? So I only had 10 minutes. I hope I didn't overrun, and I'm going to stop there and be part of the panel. Thank you.
Thank you, Monica. There was an amazing introduction. We did go over a little bit, but it's okay. We have to definitely close the loop. So on we go now. I'd like to welcome my amazing panel of experts. First, obviously, Monica Singer, who you already met from ConsenSys. Then I'd like to invite Ada. Ada, can I ask you to please, there we go, turn your video on. There you go, that's Ada Vaughan. Then we have Mel. Hi, Mel. Nice to meet you. Nice to see you. And then we have Leah. Can you please turn your video on, Leah? I know you have internet connection issues. I hope the video will not fail us. Okay, let me do this. Perfect. So first, what I'd like to do is maybe give a chance for my three other speakers to introduce themselves very quickly, who they are and who the companies they work for. Mel, let's start with you. You're on mute.
Fabulous, thank you. Mel Tsiaprazis, I'm the Chief Commercial Officer of Bitstamp. Bitstamp is the world's longest running exchange for 10 years. It's an exchange that was the world's first regulated exchange and is very passionate around cryptocurrency and being used for good. A personal passion of mine on today's topic that Monica touched on quite a few times in her great presentation, thank you, Monica, for that, is around financial inclusion. And one key point that I want to just push on what Karyl said about the 1.7 billion people that are under or unbanked, 70% of that is women. And I think that's an important number to remember because it typically is women in the developed world that make decisions on financial management. But it's a pleasure to be here. Thank you for having me.
Thank you, Mel. Leah, on to you.
Hey, everybody. Thank you so much for having me here tonight. My name is Leah Callon-Butler. I'm the director of Emphasis. You may also recognize me from a mini documentary that my company produced. It's called Play to Earn, NFT Gaming in the Philippines. You can find it on YouTube. So I'm Aussie, as you can probably tell by my accent, but I've been based in the Philippines since 2018. And it's been really incredible. When I first got here, I really thought that something special was going to happen here in terms of crypto adoption. Over the last year, that thought has been wildly validated. So I'm sure we'll talk about that a little bit later. But Emphasis, just to give you a little bit of an idea about what we do, we're an advisory and investing firm, but we have a real knack for communications and a passion for working with very technical founders who have world-changing ideas, but find it difficult to kind of explain that to people. So we break it down into the human impact stories so that everyone can get on board and understand what this technology is for and where it's going.
Perfect. Thank you. And Ada, you're on mute.
Hi.
Okay, perfect.
Can you hear me now?
Yes.
Hi, I'm Ada Vaughan. Nice to meet you all. I'm honored to be here today on behalf of the Stellar Development Foundation. SDF exists to support and grow the Stellar Network, which is an open source, fast and flexible blockchain that connects the world's financial infrastructure. Stellar is built for payments, in short. And at SDF, we're really proud to have strong female leadership, including our CEO and Executive Director, Janelle Dixon, and to support projects that improve financial inclusion around the world, especially in emerging markets. Thanks for having me.
Thank you. And I'm proud and honored to have such few women experts today with me talking about this very special topic. Maybe Leah, we start with you. What would you say are some of the most tangible applications of blockchain and crypto for financial inclusion?
Yeah, thank you. So I guess I'll pull from my experience here in the Philippines. So when I first arrived here, one of the main use cases that I saw was remittance. I'd always been interested in how crypto could be used to make payments faster, more transparent, cheaper, and that absolutely made a lot of sense here in the Philippines. So here, as you're probably aware, there are limited job opportunities for Filipinos, and many people are forced to go overseas in order to find good work and an income. And the practice is that they send it home to family. So it sort of hovers between like 10 and 11% of GDP in the Philippines that is made up through remittances. That was accelerated very much in the pandemic. So people were very concerned when COVID-19 hit, and a lot of OFWs, as they're known, overseas Filipino workers, were repatriated. And people thought, oh my God, you know, this is awful. Where is that lifeline going to come from? Because remittances actually make up, I think it's something like 3 times the value of aid money that comes into the Philippines. So it is really a critical lifeline for a lot of poor and vulnerable communities. What actually happened is that remittances didn't drop. We saw that it hit an all-time high. So the burden on people who remained employed, kind of shifted. People had to be sending more money home to kind of make up for the loss, or I expect that people were drawing down from their savings. So remittances can't go away. It really is a great use case for blockchain because it can reduce cost. It can make payments a lot faster. And that actually makes a huge difference to people because it is a UN sustainable development goal to try and get the cost of remittances down. However, my thinking on this has changed a bit throughout, actually not a bit, it's completely changed throughout 2021. What we saw here in the Philippines was the rise of blockchain games. This was a really different type of use case for blockchain. It meant that, rather than having to have some money up front to be able to buy a Bitcoin or buy Ethereum and perhaps, have that opportunity at wealth creation, which a lot of people don't have that money up front. Instead, you could play a fun game and earn cryptocurrency rewards in that game. What that essentially meant was that there was a way for people to kind of get into the crypto economy without any money up front. They could use their time and their skill in playing video games. Filipinos are amazing at playing video games. Everyone loves it, and earn crypto rewards in return. To me, this was huge for a number of reasons. I won't babble on about it forever. So check out the mini documentary if you want to see more about, what the impact was. But, it gave people an opportunity to be able to earn at home. So particularly for women, when they were used to kind of having to leave home to find work overseas, they would leave their young children behind. It's incredibly taxing, emotionally taxing on families. Suddenly there was this opportunity where crypto is fundamentally cross-border so that people don't have to be. So we're starting to see this global digital economy come up, which people can access through the craziest things, fun games, and earn crypto rewards in a very global economy from the comfort of their own home. So I think there's many different use cases, but for me at the moment, Web3 gaming, as we call it, is a very, very interesting use case.
Thank you, Leah. And on to a second Australian on the team with me, Mel. So which features and characteristics of blockchain and crypto, which we heard Monica talk about, do you think can be leveraged to really create financial inclusion?
Yeah, I think that financial inclusion is a struggle that we've all had for a long time. And there are some great aspects in it, and I agree with Leah around play to earn. I think that's fantastic. It does actually require people to afford to have a smartphone. So when we look at that large number, there are some still barriers to entries. And that's, I think it's perfect. I'm a huge supporter of it. Bitstamp is a huge supporter. We support a company called Zebedee on kind of play to earn, and I think that's really important. But when you look at blockchain and what it can do, there is absolutely the remittance angle, but there are actually some really basic components such as personal identification and verification. There was a German NGO that worked with an Ethereum organization that effectively, in Tanzania, when you actually gave birth, there were a number of mothers that couldn't afford to get a birth certificate for their child. Now, if you think about it, the birth certificate is your first verification that none of us think about, but we have, and that's the start of your identity to enter into the financial system. What they were able to do was actually on the blockchain, be able to create the birth certificate. They handed out plastic cards with a QR code on it, but it actually evolved even more because now they have a record they can use for medical identification. So now you have the Red Cross working with them to be able to put their medical history on this QR code, which effectively is reported on the blockchain. So I think when you think about financial inclusion, it all starts from verification. We need to think about how do we use blockchain beyond just the remittance, but also in other components. The other example I wanted to share with everyone here, which I thought was really exciting, was with IBM and something they created called the plastic bank. So when you think about some of the environmental challenges that we have in the world, plastic in oceans is constantly bantered about. Don't throw your plastics out, recycle. 80% of the plastic in the oceans comes from developing countries, right? And what was really compelling about how they use the blockchain, they use it in Haiti, and they created a recycling location where those that are probably more economically disfortunate take the plastics in terms of whenever they bought their produce, they'll take it to the recycling unit. They would get a certain amount of digital currency that they will actually either put onto a plastic card or onto their smartphones, which they then could use in the real economy in Haiti. So effectively, through the use of blockchain, you are making environmental impact. You're creating an economy when actually the traditional financial infrastructure was decimated, right? So I think when we're looking at these practical applications, it gives me hope for financial inclusion. I think what we need to do is start encouraging it on its usage on a greater scale. There's some great use cases. How do we take it to the next level? How do we break the myths of fraudulent activity? Because that's my favorite myth, because I then go, well, help me understand about this fraudulent activity, because according to external independent advisors, less than 1% of transactions in cryptocurrency is fraudulent. When I look at TradFi, and I come from a TradFi background, 2 to 4% of the global GDP is viewed as fraudulent. So I think we need to start focusing on the benefits that blockchain can give us. I think Leah touched on a number of them, which is fantastic. Then there's the benefit of identification and benefit of creating more economic value. So I think that's more positive than negative.
Definitely. Thank you for that, Mel. Ada, so with all of this, do you think financial institutions today are using blockchain for financial inclusion? And if yes, how?
Yeah, that's a good question, because of course, in the traditional finance world, there are mixed motivations, right? So you have a lot of intermediaries involved in these traditional financial transactions that go across the sort of established rails. And so I think there has to be kind of a win-win value proposition for the institutions where the blockchain technology allows them to do something new. So it allows them to settle faster. It allows them to make a cross-border payment more efficient. As long as there is benefit both for the consumer and for the financial institution, I think that these kinds of technology transformations will occur, but there has been a lot of opposition. I mean, to be frank, it's like it's hard to unseat a really established infrastructure. And so, you know, our attitude at SDF has been to really like extend and enhance the world's existing financial infrastructure rather than replace, because a lot of things work well, right? I mean, especially like domestic payments and things like that. So I think that institutions that are looking at areas of friction, areas of, you know, slow transactions, difficult illiquid currencies are an excellent use case for blockchain. So you have people with currencies that are either, you know, just volatile, illiquid, like they're not on world markets, world FX markets. So when you tokenize currencies like that, you can really enable an extension of financial access to the people who live in those markets. So I think in emerging markets and in areas where there's friction, definitely blockchain can be a boon to all parties.
Sorry, thank you for that. Monica, so maybe to kind of put all of this together, do cryptocurrencies have the potential to give women financial independence and freedom?
No brainer, of course. Just think, I'll give you an example, okay? First of all, ladies, it's an honor to be with you. I love it. You know, it really, I'm very touched. I live in Africa, okay? So, and just think 1 second what happened in Afghanistan. Do you remember all these people leaving to the airport running with nothing? They had nothing, not even a suitcase. Just those people did not only lose their money, they lost their ability, like Mel was saying, their identity. Many of them are professionals. They moved to other countries. How are they going to prove that they are doctors, accountants, lawyers, if the university where they live maybe bombed the central database of this record? The properties that they own, the records disappeared in time of war. And the same would apply to Ukraine if the Russians now destroy it, and so forth and so forth. Remember that now creating this self-sovereign identity where the information of all your assets, all your history, medical history, your degrees, everything gets now under your control in the cloud. You can live anywhere in the world with nothing and that includes your money. Now, in South Africa, we're still very dependent on cash. You know, we have massive social grant systems, you know, like really out of 56 million, 20 million are on a social grant. They get paid in cash in many instances. And then what happens is the old ladies that stood in the queue outside of the post office, they get given the cash, that put it in the bra, they walk out and then they get attacked. You tell me. Or they get home and they get beaten up by the husband so that they can be given the money. You tell me. Or they tell little girls, don't worry, you don't need to study or learn about money because your husband is going to look after you. Really? No. So the point is, girls, we need to educate girls and we need to give them the power to understand cryptocurrencies and any type of digital coin where they keep the private keys under their control in a USB, or they memorize the seed word, and then they will learn how to manage their own finances. And I'm a chartered accountant. I dream about money all the time. From the time I was little, I knew I was going to be an accountant. But the truth be told, if you're not an accountant, the most people do not know about money because money has been kept like a big secret so that we, the accountants, can come and save the world. Huh? Everybody needs to know about money. So for the first time, we have the right technology that it's going to be possible, that very simply, and you don't need a smartphone. You know, we won a prize, ConsenSys, of the very good technology in a competition we did with a Visa, where we proved that you can actually put your central bank digital currencies or stablecoins or crypto in a credit card type device, because people are used to credit card devices, you know, or a piece of paper with a QR code. So trust me, when people say that the technology cannot be done at the grassroots levels to developing countries, that's not true. And really, Leah, what you guys are doing in Play to Earn is exactly what we need to do in Africa. These kids are unemployed. We have a massive unemployment. And I believe that if we can train all these kids that are in the streets, we can actually give them a livelihood and massive potential. Because everything begins with a game, but once they start learning about this, they'll be able to start saying, what else? What else? You know, they go into the internet and said, and I can do this and I can do that. And this is the world. There's no walled gardens. But we need to start with the girls. And it's so sad in our industry. Look at, this is a miracle that we have all these beautiful women, really, because most panels, they're all men, you know, really. So I don't know what happened to women that were told, you don't need to worry about this. This is the greatest potential ever invented to empower all women in the world.
Thank you for that, Monica. And you raised a very nice point about money. And I'm going to jump to Leah to ask a very, very simple question. Is crypto money?
I actually think that's a very complex question. I just want to say, Monica, I love hearing from you. I have never heard such a passionate and enthusiastic accountant in my life. Like, I think you are such an incredible advocate for this space. Like, just every time you talk, it's just your energy comes through. I absolutely love it. Sorry, I had to say that. But Karyl, in answer to your question, what is money? Money is a social construct. It exists because we all agree it is money. Hate to break it to you all, but if we're talking about cold hard fiat, it is a piece of paper or a piece of plastic. And, you know, people have relied on these kind of mediums of exchange for a very, very long time, be it giant rocks at the bottom of the ocean, a la Island of Yap, or be it seashells or rocks or pieces of paper. You know, it's only money because we agree it is money. What I'm seeing here in the Philippines is that crypto is becoming even more valuable than fiat money. And I'll explain to you why. With the play to earn movement taking off, people were able to earn in crypto. And obviously, if you're earning, you want to be able to spend. What people would have to do to be able to spend it is jump through so many hoops. Like, you're earning this incredibly obscure in-game crypto-based reward token. You'd have to sync and swap it to something a little bit more digestible like Ethereum. And you'd probably do that on a decentralized exchange, which are complicated to use. You know, they're not easy. It's not a, a nice regulated exchange that is kind of user friendly. They're very complex. And then from there, you'd have to send it from your decentralized exchange to a regulated exchange that can interface with fiat. And from there, you've still got to send it to some kind of bank or a cash out center. Like, there's a lot, and you're losing money with transaction fees the whole way. Now, in the Philippines, we've got such a large segment of the population now actually earning in crypto that you're seeing these solutions pop up where they're allowing people to spend in crypto. First, I saw on Facebook, over 100 merchants. I did a little bit of desktop research. I found 100 merchants willing to accept SLP, which is the in-game reward token of Axie Infinity, as payment. And they were doing this via the Ronin sidechain, which is specific to the game, on their phone. It was everything from like, a kid's toy shop to a vehicle repair shop to a dumpling restaurant to a dermatologist, like a dentist. All of these people or organizations, companies had recognized that there was a cashed up segment of the population that wanted to spend in the currency that they earn in, which was crypto. Fast forward a little bit now, we've even got solutions like there's one thing now called XLD Finance, which is launched in the Philippines, but they prepare to serve the rest of the world. And it's kind of like a electronic payments app, a bit like Gcash, I guess, if you're familiar at all with like payments in the Philippines, but it's a MetaMask login. And this is really important because it gets back to what Mel was talking about around identity. And particularly for women, if they don't have those identity solutions that allow them to get a bank account, you don't need those in Web3. And this is why it's taking off. Suddenly, I can earn money completely without permission from a game. I can have it in my crypto wallet and spend it on things without ever having to produce an ID document. And that is incredibly empowering. So people like that who have not been able to participate in the traditional financial system, who can now do all of those things, earn, save, spend, reinvest in crypto without ever producing an ID document, they're saying crypto is money a lot more than Philippine pesos was.
Thank you for that, Leah. Ada.
Can I chime in on that one?
Yes,
I'm
please
going
go
to
ahead.
chime in on that one too.
Of course.
Yeah, because it was something that I was kind of thinking about in advance, like these very existential sorts of questions and like what your ideology is about money. But I'd like to give like for the sort of layperson or like someone who's less experienced in the space, the answer that I would give is it depends on what kind of crypto, right? Because cryptocurrencies that are volatile are actually, they behave more like commodities in a way because their value changes against a market. So I would say that the cryptos whose base value change based on market conditions are more like commodities, and stable coins are probably the most like fiat money because they are attached to the value of fiat money assets. And then DeFi, so the kind of DeFi protocols that are out there and the ways that people put money in with an expectation of gain behave a little bit more like securities. So I think there are a lot of flavors of digital assets, and they all, work similarly to other instruments that we know. And it's one of the reasons why the regulatory environment is so tough, because they're kind of like that, but not exactly. So that's, I think, a really interesting dimension to look at.
Thank you, Ada. And then Mel, I think you wanted to chime in on this as well, or was it you? Okay.
Oh, sorry. There's lots to talk about, and I equally want to echo Monica. This is an amazing panel, and I'm learning so much from everyone here. So thank you. The other really exciting thing that exists from a financial inclusion perspective is that you can actually start building a history of where you're spending, right? And Monica mentioned this earlier in terms of the Ukraine, an amazing example, right? You can actually start building a credit history. And how amazing is that if you're now in a position to say, actually, you don't need to have an independent person tell you whether my creditworthiness is right or not, but here's a complete history of where I've spent money. It's completely recorded. So actually I can now start getting microloans, or I can actually borrow funds for a car. Now, this is important because there's some really interesting things that have happened in Kenya, for example, and maybe Monica knows this earlier than I do, but actually there are two different interest rates in Kenya. One where you're willing to give your personal data to the company, which they can then use at their free will and sell, which is a lower interest rate, or you have to pay for the right to keep your privacy. Now, You can only get away with that because the focus that they have as a market are those that are underprivileged, underbanked, and taking advantage. Now, if you put all those transactions and all your private data onto blockchain and you own it, there is no one has the ability to use it again. I think this becomes really powerful. So do I think it's a form of money? I definitely think it's a form of currency. I agree with Ada that there are different flavors and different associations, but I think it's a heck of a lot more and more powerful than we've ever seen before. And like Leah's point is, we may have started with rocks, we may have then started kind of shifting into kind of bartering and then paper. Blockchain just absolutely escalates it to a whole new level.
Thank you, Mel, for that. And so maybe I'm staying with you. What would you say would be the long-term impact of crypto and blockchain? And what would that mean for the female economy?
Wow. There's a crystal ball question if ever I heard one. I don't know what will happen, obviously, but let me explain what my desire is and my wish is. My wish is for a community, and I say community because I believe that the world is just a single community because we are all just people. We may have different flavors of it, we may have different experiences, but we're all just people at the end of the day. So my aim is to have a community where everyone has the right to be educated, the right to live, and the right to make choices that best suit their lives. And that may sound like a big soapbox and a real Martin Luther King type of moment, but I genuinely believe blockchain will enable that, because blockchain fundamentally addresses a number of the challenges that hold us back as a single community. And we see that even today with the Ukraine crisis. So I definitely see it making an impact. I think Web3, I don't know how impactful it will be, but I can tell you whether it's a scale of to a zillionth or to a billionth, it's up in that range. And for those of us that were around, like Monica said, around the first time the internet came out, I remember as a young consultant trying to work my way up that corporate ladder, selling mobile commerce to banks to let them know the world is going to change. You're going to have a smartphone and you're going to be able to do everything on this. And guess what? 9 out of 10 banks laughed us out. And yet the whole world now runs from our smartphone. And I genuinely believe blockchain is very similar, where those that are scared by it, don't understand it, and don't want to learn it, will see it as an issue. Those that are willing to embrace it, learn it, and use it for good, I think it will fundamentally change the course of our future history.
Thank you.
And I'd like to think that Bitstamp will be part of that journey. Regulation is key. I will say this as well. I think this is something we'll be really conscious about, that there are some bad actors in this space. Like anything, it's open to it. And I would encourage more regulators to look at the currency side of the blockchain, to support stablecoins, to support CBDCs, and to also support mainstream cryptocurrencies so that it's safe for all retail users to exchange in a very productive way.
Thank you. Thank you for that. Ada, I want to come to you and talk about open blockchains and how would they be contributing to financial inclusion, in particular, our favorite topic, women having access to financial services.
Absolutely. I think the most exciting thing about open innovation and open blockchains is the kind of democratization, not just of the services, but of the people building those services. And so, for example, SDF supports a lot of projects in emerging markets where the builders are solving, you have innovators in a market solving the problem that is unique to them. Who understands the problem of women and financial inclusion better than women who are suffering from a lack of access? And so we really seek out projects. We do hackathons, we do special invitations for women to, participate in our grant programs and contests and all these things, because they really understand the problem. Sorry, these are very expensive and they just fall right out. Anyway, but the point is, enabling women to solve their own problem, right? It's a question of empowerment, is a thing that I think is really exciting. And SDF supports these projects. In addition, you have this intersection of the ability to work remote, as Leah mentioned, the ability to work and do freelance work on a platform that can pay you in a digital currency. Suddenly you have a world of people that you can work for, that you can find projects and develop your skills and work online. And this intersection of both, you know, what they're calling now like the great resignation, like the future of work, how things are changing, as well as opportunities in emerging markets. It's suddenly, you know, I can have a designer or a, you know, a freelancer anywhere in the world on these platforms. And I think that is going to be a driver where blockchain and the future of work intersect to really advance women's future.
Thank you for that. Monica, I want to come to you, and I think with a question that will also answer some of the questions that we have in the chat. When we talk about technology, obviously we assume that internet access and electricity are a must. But however, we see some cases like Leaf in Rwanda and Kotani Pay in Kenya, and these are two examples of fintechs that actually allow fund deposits and transfers via feature phones, like your basic old phone that just has a dial tone on it. And they both use blockchain technology. How is that possible? And does infrastructure still create limitations when it comes to accessing such services?
Okay, you have to understand, not everything is on-chain. You know, people think that everything is on-chain. No, a lot of things happen outside of the chain. And then let's say once a day or whatever, if there's no electricity, you go and plug it. You know, that's what people do in South Africa that are using this technology. They go and plug it in and then it downloads and it updates. So that's in a nutshell. So I can assure you that when there's a will, there's a way. And especially in Africa, we're very resourceful. We always come up with, you know, a way to resolve this. So I don't think that the lack of internet is really, look, it would be lovely, you know, but we hardly have electricity. So what are we talking about? You know, it's a challenge to live in Africa. So you have to have a generator, blah, blah, blah. So my point is, we you know, the one saying about South Africans is we make a plan. We make a plan, meaning we do with what we can, and lack of electricity or the internet is not going to stop.
Thank you. And Ada, since you did mention that Leaf is actually built on Stellar,
it actually is. Yeah.
I know. If you want to make a small, comment on that, that would be great.
I'd love to. You know, if you haven't seen an interview with Tori Samples, one of the leaders of Leaf, she's amazing, terrific, like inspiring female leader. And Leaf is basically I mean, imagine if you didn't have an address, right? If you have to leave, as Monica was saying, like if you have to leave a country with nothing. And so it was originally built to solve the problem of banking for refugees. You know, how do you store value? How do you transact and survive in an environment where you have no address? And so, yeah, it is absolutely built for purpose. It's an amazing app. It runs on low feature phones. You know, you don't have to have a fancy phone. And yeah, I'm proud to say it was built on Stellar.
Thank you. Leah, I want to come to you because I want to talk about something new, a new trend that, at least for me, it could probably be old news for you four ladies, is seed crowdfunding to raise capital by bypassing traditional sources. So women are reverting to this. Can you share what an ICO token approach or sale is and what are its implications?
Yeah, absolutely. So really simply, an ICO is just a modern version of crowdfunding for crypto-based projects. So it gives you ownership of a tradable token. It's kind of like the tokenization of fundraising. And it means that you can buy a token online, which will, you know, give you some kind of exposure to that particular project. But what I would say about these kind of projects is it isn't as simple as crowdfunding. You do need really good token economics, as we would say. You need to build a sustainable economy that is actually going to drive supply and demand. You know, it's not simple, but people still do it. And I think today what we're actually seeing more of is an IDO or an IEO. I'll explain that. With an ICO, it was people just kind of like generating a token, and it wasn't confirmed that it would actually be listed on an exchange. So one of the great things about token projects is that you kind of get immediate liquidity on these projects rather than sort of buying something like shares in a company, particularly if it's early stage. You have to wait for the next round of funding to be able to get out or, you know, cash out. It's quite different with tokens. You have a lot more flexibility. But what we're seeing is people doing fundraising that might be called an IDO, which would happen on a decentralized exchange, or an IEO, which would happen on, say, a regulated exchange. FTX, for example, is doing a lot of them right now. It's the same kind of thing, but it just means that you've got that sort of assurance that the token is going to be listed on an exchange because it's actually happening on the exchange. But one thing that I would add to that that is very interesting, I think, is DAOs. So a decentralized autonomous organization is another way that people are raising money. It's very simple. Like I'm sure a lot of people on the call would be familiar with something like a Rosca or an ASCA. It really is just kind of like a group of people with similar values and similar goals getting together and pulling money. And then together they can decide on the kind of projects that they want to fund. So it is, I think in this Web3 space, it is very, very interesting the way that people are innovating on fundraising. And I don't think that innovation is going to stop. You know, with every experimentation, people are kind of recognizing the benefits and also the drawbacks of every different option. And then we're kind of seeing something iterate on top of that.
Sorry. It wouldn't unmute. Thank you for that, Leah. I want to ask a very quick question to Mel and then just open up to the Q&A. And we have tons of questions and we can address those. So the crypto world, unfortunately, seems to be following the tech and financial services world in that it's heavily male dominated. How can we ensure more diversity to avoid the same challenges we see in the fintech and in the financial services ecosystem?
That's a really great question and important one, especially when we talk about financial inclusion and especially when we talk about the impact on women. And there's a number of things that can be done and should be done. What I would say is that from a personal perspective, it's a key aspect of mine to educate other women, right? I think to break down the barriers of like people look at tech and they get, oh, tech's already scary. So myself and a number of amazing colleagues, Sophie Spiller's online, Heather, and some other organizations, we're setting up an organization called Women Who Crypto. And it's very much focused for women to learn how to invest, trade, but also understand the working in crypto is actually great. And what we want to do is focus on some of the wonderful achievements that women have made. Day before yesterday, International Women's Day, I met an amazing female founder from This Life. She's effectively building a metaverse for products aimed at every single human being, but based on lifestyle choices. And this is a female founder that is very inspiring and moving ahead and has a strong knowledge of blockchain. I actually think we need to be showcasing these examples. I think we spend so much time about how we hit 33% in the boardroom. You know, you're the only woman on the panel. I want to change the dialogue. I think we all owe it to each other to actually using that airtime to showcase amazing women achievements. Like if we look at the knowledge that Monica has on blockchain and how she can present that information to make it so compelling in such a short period of time, phenomenal. I would love for us all to talk about Monica more. Leah, the work that you've done in the Philippines with your organization and bringing in play to earn, that's not easy, right? You've got a wonderful story to tell, but it's really challenging. The stellar organization, Ada, that you're driving with is phenomenal and fundamentally changing the lives of so many people around the world. I want us to start talking more about these activities. And then I want us to educate more women and make it attractive to come and join. So let's create a movement.
Thank you. And it starts with women like you all. And thank you for that. So I want to start taking some of the questions that we have in the chat. One of the questions was about infrastructure and some of those, not infrastructure, but some of the accessibility challenges. Jill is asking, 25% phone ownership gender gap in Asia, 15% in sub-Saharan Africa, 25% internet usage gap. Are we at some point going to face the fact that we might exclude women if blockchain gets scaled? Ada.
That's a great question. I think it comes back to some of what Monica was saying about financial literacy. I think blockchain is really, in order to promote financial inclusion for women and everyone, there has to be an intersection of both financial literacy and digital literacy, right? So not just access to devices, but like the kind of usability and like desire to use them. right. I mean, women definitely have had access issues with other, other sorts of things, right? Technology, education, all these things. And only with a really focused effort will we be able to promote a level playing field.
Thank you. Yeah, Monica, go ahead.
Okay, so my vision is as follows, like a lot of people do not believe in central bank digital currencies. They say, why do we need them? We've got cryptocurrencies, we've got stablecoins, all that story. Why I believe, not only because it's the liability of the central bank is a lender of last resort, can't fail, but what I truly believe is that if the central bank implements CBDCs, they will have a duty, a legal duty, because it becomes legal tender, legal duty to educate everybody. And where do you start? We start with the kids. So today, I don't know in your countries, but in my country, we only teach lifestyle skills, like budgeting, or when the kids are in high school. We have to go from the beginning in primary school to teach the kids in the same way we teach them to use the iPad, to watch the cartoons, and they know how to, my grandson, he knows everything more than me, how to change channels, how to search for things, 3 years old. We need to teach them how to use digital money. And once they do this gaming and they start selling and buying the little games, and the armor, and they will slowly but surely, with this knowledge of money, digital money, I can assure you, they are the ones that are going to start saying, what else? That's how did we explore the internet? When someone gave us the computer and said, okay, here's the internet, sent an email. And then we started exploring and inventing so much. Little did we know that in Web 2.0, we gave up our identity and our data, and we got abused, and we need to tell people about this. But what I'm saying is that in Web 3.0, I think that once you have central bank digital currencies, the government will have to teach everybody how to use it. Like simple example in El Salvador that made Bitcoin legal tender, everybody's being taught how to download a wallet, El Chivo, and how to use it, and when to use Bitcoin, when to use the US dollar. Financial inclusion and education are key, but from the very beginning, I'm saying primary school to everybody.
So I actually want to add a personal question to what you were saying, Monica. You're talking about kids really accessing these funds. I have 2 teenage daughters. They used to spend a lot of time on Roblox, and obviously they kept wanting to own Robux to buy things and change the clothing. That's in a way in the spirit of what we're talking about, right? It's a digital currency, but they use it to buy things for their house they're building digitally, which really looks ugly, by the way, but nonetheless, that's my point of view. But for them to actually do that, they kept asking for fiat money that comes from me. How can we kind of create a disconnect where the parents are not really constantly paying for things that doesn't make sense to them, like buying a digital pixelated hat because they love so much for $25 of my money.
This is the case for moms.
Move them
come full circle.
Move them to Web 3.0 games.
There you go.
The play to earn is not under the control of the owner of the game. So they can then earn and move the hat and the clothes and to wherever, and they can even eventually resell it. So isn't it really that's what they must do? They must move to a Web 3.0 type game where they are the owners of the items they buy and they can monetize it. So just teach them about these new games, and therefore you'll become financially independent.
That's great. And I think that would be my answer to Nitiari's question about, even if we give access to technology, how do we create digital capacity and literacy? I think we first start with the moms. We tell them exactly what their kids should be doing and how they should be doing it. And maybe the moms at home can do a lot of that teaching, because literacy, I mean, if it's only at school and then the house is not really supporting it, it's still going to be very hard. And we need the parents to also understand what the kids are learning and what the new world is all about for things to move forward. So Laura Hill is asking about crypto is not fully yet regulated, at least in the US, but I think I saw another message that it has been 2 days ago. Do you think the landscape will change once more regulations are introduced? Blockchain is a supranational technology, of course. How domestic regulations will impact the use? deployment access of this technology globally? What measures do we have in place to safeguard all those egalitarian aspects that makes it so special? Who would like to address that question?
I will take this from an exchange perspective. So I think that regulation when it comes to the cryptocurrency is something that's still evolving. And there are some countries that are well ahead of the curve than others, but there's also larger implications as well. Remember, cryptocurrency is just another asset class of a financial services broad product suite. So it needs to be regulated. It needs to be looked at. And unlike other asset classes, it's one where actually a lot of retail has direct access to decision making. And so I think it's really important that governments actively provide strong, safe guardrails for cryptocurrency exchanges to provide a safe engagement. I think also it's important to make sure that there are strong AML and KYC adherences. Bitstamp is definitely a world leader when it comes to KYC and AML from a cryptocurrency perspective. We generally believe it's important that whoever trades in our exchange can trust that the other side is as equally safe. I think that's important. And I think that the governments have been challenged to do that because they don't understand it. So I think it's the responsibility of every person within the blockchain community to encourage their local politician, encourage their local government, their local regulators to actually be looking at this in a more constructive way, rather than looking at what some countries have done, which is ban it, which actually, when you look at somewhere like China, it's quite reflective of their own monetary policy. And then you have the other extremes of like El Salvador, Jamaica, where they've actually made it a national currency that people can actually use day to day. I think there are different needs for it. I think there's also just one quick other point I should mention. Regulation should also happen both at a retail and at an institutional level. I think there are different ways that you can trade currency. A lot of what we've spoken today is around financial inclusion. It's very retail focused, kind of your mums and dads. But then you have a lot of large organizations that are entering into this space, making major changes. And I think we need to look at how we regulate those organizations and provide a safe trading environment at that global level as well.
Thank you, Mel. There's a question from Catherine about the environmental challenges around blockchain. And I actually want to add the second component because they come hand in hand, the two myths, right? Cybercrime and climate. Where are we and where is it headed? And is it a concern?
I quickly want to answer on cybercrime. Give me a break. I have to tell you, more crime is being committed with cash than with this technology. Okay, this technology is transparent. This technology, you can see the audit trail. I don't know if you even know the latest book by Laura Shin, that she uncovers who actually committed the crime on the DAO, which was a very, very well-known hack. She even uncovered that many years later. So people, if you want to end up in jail, use Bitcoin for illegal transactions. You know, ask the poor kid that is sitting in jail, you know, which was Phil Ross, poor kid, you know, 3 life sentences, really so unfair. So really, no, this is not the one that you use for illegal activities. Use cash.
Yeah,
I can comment.
Go ahead. Go ahead, Leah, and then we move to Ada. Go ahead, Leah.
Go ahead.
I was just going to add on to both what Mel and Monica said. I completely agree. I always say cash is the ultimate privacy coin. Cash actually affords a lot more privacy. As I think, Monica, you were saying earlier, it's very, very difficult to understand what people are spending their cash on. So it is the ultimate tool for criminals. But this kind of comes back to the regulation thing as well, around, you know, regulators actually understanding what this technology can be good for and how much it can actually be used as a tool for good. I think a lot of regulation is around risk management as opposed to thinking about how it can foster innovation and accelerate growth. And the problem here, like we've already seen things like this happen. A lot of people on this call might be familiar with things like the travel rule, which was, you know, recommended by the Financial Action Task Force. This particular recommendation, it was a bit like taking something that was built for a horse and cart, that is banks decades and decades ago, and retrofitting it to a rocket ship. The irony of this is that blockchain could actually do what the travel rule is meant to do, that is identify sender and beneficiary, and if they actually kind of turn up on any naughty lists a lot better than the travel rule actually can. So it's kind of frustrating when you see things like this, people thinking that blockchain is a great tool for criminals. It's not. It's actually the best friend of law enforcers and regulators. So I actually think that this is super cool because you could start to create regulations that are fit for purpose. So like Mel was saying, if we've got people who they have a low income, they don't have ID documents, but they're not looking at transacting large amounts of money, then perhaps we have very low KYC requirements or none at all on those types of people, which can really affect financial inclusion. And if it's done on the blockchain, you can kind of put all those checks and balances in place to make sure that it is actually working as intended. So that's my rant on that one. But I actually think that it's such an exciting space for regulators to be in, provided that the blockchain community actually comes to the table and helps educate. To be honest, I kind of feel like everyone here seems like the kind of people who would be willing to have that conversation with regulators, but a lot of the blockchain community really stands back from it because, they feel like they're the enemy. But I don't feel that way. I think we kind of need to help educate.
I agree. It doesn't have to be.
Sorry, Monica, 1 minute. Let Ada make that comment and then we can jump to you. Yes, Ada, go ahead.
I agree. It does not have to be adversarial. I think we need to be here as a resource and to collaborate with regulators and to communicate how these things work. I don't envy their job of trying to balance. I think they the regulators, or at least the policymakers that we listen to closely in the US, they're trying to do two things, right? They're trying to protect consumers from loss and get tax revenue. That's it. It's really simple. But doing those two things, if they apply, too heavy of a hand, it can ultimately hamper innovation. And they don't want that either. They want the US to stay competitive and to continue to innovate. So this is a tricky balance. And without a real understanding of how blockchain works, it's a super difficult challenge, right? So we've been trying to help educate regulators. We, speak really closely with offices on the Hill and try to provide as much information as we can. Stellar is a layer 1 blockchain, right? Like Bitcoin is a blockchain. There are many blockchains and they're not all created equal. And to help regulators kind of dig in and understand this speaks to your sustainability question, right? Because the way a blockchain works, the way it records transactions, dictates like how energy is used, how much energy is used. Bitcoin is incredibly inefficient, right? It requires computers to do a huge load of heavy, computational math to record the transactions and distribute the ledger. And therefore it is like, it's a mining blockchain, and mining blockchains consume a ton of power. It is a power hungry system. But you have, other systems like proof of stake, proof of agreement. Stellar does a series of really light messages and creates agreement among groups. And this is actually incredibly efficient. It's super fast and it uses very little power. It can be done on a very simple machine with like low technical requirements. So not all blockchains are created equal, especially from a sustainability standpoint.
Monica, very quickly for your intervention, because I have one last question I want to ask.
Okay, no, this is important because also you mustn't forget vested interest. I give you an example. You say to the regulators, this technology will give you real-time information of the banks you regulate. Then go to a bank and say, you're going to have to disclose every transaction real-time to your regulators. Do you think they want this? Another one, you go to the government and you say, this technology will give you real-time taxes, and you go to the Auditor General. This technology will prevent corruption in the government. We will know exactly where the money of the taxes go. Do you think that anybody phones me back after I tell them this? So what does it mean? The vested interests don't want the transparency, people.
Thank you for that. And my last question, without really going into too much politics, but do you think we will have, to take Inez's question, any blowback from the recent media stories that businessmen are that are being sanctioned and they're putting their assets into crypto? Is this going to have a negative impact on cryptocurrency in general? Mel, you're moving your head. Why don't you take it?
It comes out to Mythbusters. This is very, very, very conscious that if you go to a regulated exchange, you need to go through AML, KYC, Russia is listed as a high-risk country right now, and most of them are listed as PEPs. So they cannot, at least from a Bitstamp perspective, move their funds into Bitstamp. And many other regulated exchanges are the same, like any other financial institution. So please understand that there are some strong crypto exchanges out there that genuinely adhere to the regulators ask for a very safe trading environment, and that includes this very scenario.
But would that have a negative impact on crypto as a commodity? Would we see?
I actually think that this situation has been a positive. The fact that you can actually get over 80 million funds to Ukraine in their hands when FX is typically T+2 and is an illiquid currency right now, I think is a fabulous a testament to what cryptocurrency can do and impact. And then to Monica's earlier point right at the start, you can now track where they're spending it as well. So I actually think let's look at the good, a bit like let's look at all the women's achievements, let's look at the good it brings, and let's talk more about that and push that into the media rather than the kind of negativity that just, yeah.
Perfect. And with that, we actually have to end our panel discussion. It is already time. I can't believe it felt like 5 minutes. You 4 women have been fabulous, amazing. It has been a very insightful discussion. It's been great for me. I hope it's been as interesting for my crowd. You ladies have great energy. Exactly, Inez, thank you. You took the words right out of my mouth. Amazing energy. I know it's late night for some of you on a Friday night. Leah, thank you so much for being with us, and early morning for others. What I wanted to tell you is the recording will be live in a few hours on our YouTube channel. So whoever missed it or wants to refer to it again, please check it in a couple of hours and it will be posted. Thank you so much for being with us. Our next FinTech Friday is on April 29, and it's about unblocking the awareness for gender intelligent fintechs. But with the discussion being so amazing today, I might actually, touch upon you ladies again and maybe do a repeat session, a continue part 2 session on blockchain and crypto later on in the year. Thank you all for being with us and have an amazing day.
Thank you, Karyl. Awesome to be here. Thank you so much, everyone.
Thank you, Karyl. Thanks for everything.
Thank you.
Thanks, everybody.
Thank you.
Thank you.
Thank you.
Thank you.